Welcome back to Paper Traders, our show here on Zacks.com where two average Joes go and try to beat the market. So I am your host, Eric, and I am your co-host with Danny. And today we have a special guest who's going to come in and give us a little bit of insight because it is earnings season. So quickly, Danny, if you have anything to add, I'd like to introduce our guest.
No, you can go right ahead. Yeah, I'm just happy to be here and to really kind of talk about earnings today. I know it's kind of on the forefront of everybody's mind. It's really kicking off this week with a lot of big name players reporting. So without further ado, welcome Sheraz Mian to the show.
Welcome,
hey,
Shiraz.
thanks, guys.
How you doing?
Super excited. Yeah.
All right. Well, first off, Shiraz, do you just want to kind of introduce yourself and give us a quick kind of background on what you do here at Zacks?
Sure. So in my day job, I manage the research department. All the research analysts at Zacks, the editors that produce all the newsletters and content on Zacks.com. And then on top of that, I'm the main earnings analyst at the firm. So all the aggregate commentary and the responsibility for keeping an eye on how earnings are shaping up, what is the outlook, how earnings have been, all that kind of
All the
fun
fun
stuff. Exactly.
I think I just got that in stereo.
So that's the long and short of it. Yeah.
And then you obviously trade yourself yet while you're
Sure.
on your free time, right?
Absolutely. I trade myself, and I also manage two portfolios here for Zacks. One is called the Zacks Focus List, which is part of the Zacks Premium subscription product. And then I manage the annual Zacks Top 10 portfolio. Yes.
So in short, you pretty much are always being involved with the market, whether it's trading, you're helping out investing portfolios here at Zacks, you're watching earnings, you're pretty much on top of everything. In short, right?
I'm totally a stock market junkie, even though it is part of my job too. But if tomorrow, for whatever reason, I wasn't doing it, I would still be reading the Wall Street Journal, the
Right.
Financial Times, the Economist, and following all of these great companies. It's just a lot of fun. I don't know how
take
anyone
notes,
could not
people.
do that.
Those periodicals that he mentioned are full of great information. If you don't already read them, put them in your, bookmark list and start.
Is that kind of like a product placement? Do you
Not
guys
really.
get
I mean,
paid?
I feel like it's just good information.
Sure,
Which
it
is,
is.
also free, which
Yeah.
is kind of the point of our show here on Paper Traders. We're trying to make sure that we use free Zacks tools, and I think reading is a pretty big thing
Sure.
in general, right?
Yeah, there's a lot of tools out there for everybody to use, and just having everybody aware of them is a good thing. Again, we're trying to kind of show people the basics of getting into the investing stock market, so kind of learning from the ground up, and like Eric said, just kind of mentioning the Wall Street Journal, and there's Stock Twits, and there's so many different things out there for you to
And
grab
we're on Stock
information.
Twits, so I mean, it's
Sure.
kind of a little ad for us as well, I guess.
Sure.
Yep.
So Shiraz, real quick. So you told us what you do here at Zacks. What we kind of do with our guests here is we also try to get their backgrounds. Could you
Sure.
tell us what you did previous to Zacks and how you kind of got into the markets and stock trading in general?
Sure. So my route into the role is more traditional in the sense that I went to business school, did an MBA, was a research analyst at a sell side firm, and then worked for a long time as an analyst here at Zacks before reaching where I am. Prior to these, I was in Pakistan. I worked in the field of finance, but not in investment field. But had a lot of familiarity with income statements, balance sheets, even then, even before going to business school here in Chicago.
Excellent. Which school did you go to by chance?
Northwestern.
Northwestern.
Kellogg.
That's a
Yeah.
good school. And actually, I just read a little news article on them today. I guess they're playing Maine. Some Maine school in the big. This is for Maine's first time in the Big Top 10. So apparently they're clearing the town out for this game. It's such a big deal.
Hey, bring them on.
Pretty crazy. Okay, and the last question we usually ask everybody is: do you remember the first stock you traded?
That's a good question.
Yeah, I don't remember. Sorry about that. Yeah,
It's okay.
You stumped me. You stumped me on that.
Well, you can't remember all the stocks. I'm sure you've traded a lot over the years. I mean, that's a pretty hefty question to throw on you. So it's not a bad thing that you don't know.
It probably tells you something about my age too.
No,
Or just the
it
quantity of stocks that you trade on an average basis. You can't remember the names.
That's
Exactly,
right. That's right.
exactly. So Shiraz, kind of changing gears a little bit off of your background and moving into more of a Zacks background. We know that earnings is a huge thing here for the Zacks rank. We know, obviously, from you just telling us that you're really big into the earnings here for Zacks and the outlook of it. Do you mind just kind of telling us what the earnings means for the Zacks rank? I know it's kind of the big thing here at Zacks, the Zacks number one buy, the 2 buy, there's 3 hold, 4 sell, and then you have a 5 of a strong sell. I'm just curious. So how does earnings impact those scores there?
Yes. So earnings are the core driver for the Zacks rank, and it's more of the estimates for the current and following year than what has happened in the past. And we look at those estimates in 4 distinct ways. So number one is what is the magnitude of changes to those annual EPS estimates. We also look at how the analysts who cover this company, how much agreement they have amongst them. Are all raising, are all lowering their estimates, or is a mixed picture? Then we want to see if this company, the stock, the surprise history. Have they been beating? Have they been missing? Have they been coming in line? And then we have this notion called upside, where we compare the most accurate of the estimates in the sample of estimates in our database, and compare that to the current consensus estimate for the stock. And that gives us an idea whether the company's on track to beat or miss estimates for the coming quarter. So it's these 4 components, primarily estimates, estimate revisions. There is empirical evidence that shows that estimate revisions are very strongly correlated with stock prices, particularly in the near term. And that's what's driving the Zacks rank and also stock prices.
Okay. Well, I guess to kind of go off of that, is the earnings, I guess, the number one thing or aspect that really kind of drives a stock's growth or decline, or is there something else that could also be behind a stock's success?
So academic research tells us that in the long run, there are 2 main forces that drive stock prices. One is earnings, the other is interest rates. Earnings are important because they encapsulate so many important fundamental aspects of the business. If a business is getting better, the analysts following the stock will be raising their estimates. If the business is not doing too good, if the analysts are not optimistic about the outlook for the company, estimates will be going down. And interest rates, obviously, you guys know, is a broader macroeconomic variable driven primarily by the Fed,
Right.
and also economic growth. So it's these 2 factors, the interplay of these 2 factors that drive stock prices in the long run. Earnings have a very pronounced impact in the short run as well.
So we're kind of seeing a little bit of a whirlwind, I would say, right now, because we're hearing a lot about interest rates cuts. We're in the midst of a really, I would say, big earnings season for the
That's
market.
right.
So I guess to kind of round it out, how often do analysts come out with expectations? Is it something that they come out a week before, or is it months in advance? How
Or is it news
aware?
driven?
Yeah. Is it?
It's an ongoing process, so the analysts will be updating their calculations and models on a regular basis. Many times during the course of a quarter or the year, management teams, company management teams will have analyst days and presentations where they'll provide more updated information about their company. There may be competitors or suppliers to that company that may have presentations and updates about their business from which the analysts could figure out how their company's estimates should be. So the bottom line is there's no one set date on which analysts come out with their estimates. The estimates are an ongoing update process. They remain stable, they go up, they go down. And we have a very close relationships with all of these analysts. The moment they change their estimates, they get captured in our system. So it's a very instantaneous process, the way our model tracks and then gives effect to those estimates.
So to backtrack just a second, because you had touched on it, you had said that the Fed rate actually impacts that. Now, given that there's been so much news about what's going on with the Fed rate and the potential of cuts or potentially raise, seems like the Fed doesn't know what it wants to do. I know this is a little bit of sidetrack going off earnings. But
No, it's all related.
Well, then, perfect. Could you give us a little bit of insight then on what could potentially happen with the Fed, given what you're seeing, and how that would impact what happens?
Sure. Yeah. So that's actually a great question. The Fed had been on a trajectory of raising rates through the end of last year, early this year. In fact, their last meeting in 2018, when they reiterated that we continue to be on this track of raising interest rates, the market absolutely hated that statement, and we had this huge sell-off in the fourth quarter of last year, where the market and the Fed appear to be moving in two different directions. The market appeared to suggest that the outlook for the economy, for the global economy, and the overall risks to the economy were such that the Fed needed to change its stance and the direction in which they moved. So the Fed eventually came around to that view. And first it said we will remain stable. We are changing our outlook, so we are not on the old pattern of raising rates. And then eventually they came around to this view of mentioning that the risks to the economy have increased from this global trade issues and all of those things, and it may be necessary and useful to cut rates. So that really juiced up the expectations and also the momentum in the stock market. In fact, most of the gains in the stock market that we have seen over the last many months are primarily driven by this expectation that the Fed will come out and lower interest rates. The question now is, in fact, the question in the market's collective mind is whether it's going to be one cut, two cuts, whether it will continue into next year as well. But yes, this expectation of the Fed cutting interest rates, which serves as a major stimulus for the broader economy, because it has effects on all the interest rates, whether it's credit cards, mortgages, auto loans. All of those rates come down, which incentivizes
People
households.
to spend.
That's right.
Yeah.
Individuals and households and companies to spend more money, which generates more growth. And it's also good and positive for the corporate sector, because if there will be more economic growth, then companies will be able to earn more revenue, and that's good for
grow, right?
And that's good for earnings as well.
So it's a balancing act for both the government and the companies to benefit from these interest rates cuts?
So the Fed has a legal statutory mandate to do two things. Number one, to fight inflation. So if there is any fear or concern that on the horizon prices will be going up, prices of consumer goods, which is what inflation actually is, then the Fed has to forestall that and get ahead of the inflation. They have a very specific inflation target that they try to achieve. And the second thing that they're legally required to follow is to have maximum employment in the economy.
Right.
And it's this dual mandate that the Fed is always monitoring incoming data based on, and they are balancing the need for more growth in the economy so that we have more jobs, and also being watchful that the inflationary pressures on in the economy do not rise to the extent that it derails the economy's expansion and growth as a whole.
So it'd be fair to say that if rates go down, then more people are probably getting into the market. The market's going to probably be stronger.
Absolutely. So the normal equation for stock prices is that the current price of a stock is the discounted value of future earnings. In simple words, what that means is that whatever a company, say Caterpillar or Boeing, is expected to earn in the future, if you brought those earnings to today using the current interest rate, that is the stock price. So interest rates are in the denominator, earnings are in the numerator. If you would remember from the back in the school.
Going back to before we
That's
had
right.
calculators all over the place, right?
So there is an inverse relationship between interest rates and stock prices. When interest rates go down, stock prices go up. When interest rates go up, stock prices go down. So if the Fed is on track to cut interest rates, that is a net positive for stocks, and that's why we are seeing all these major indexes making new all-time highs.
Okay, I'd just like to remind everybody, too, that Shiraz just went through a lot of information. We are streaming on Twitch, Ustream, YouTube, VK, Live EDU, Vaughn Live, CaveTube, Africa TV,
Everywhere.
FC2 Live, Periscope, and Twitter. And please get your questions, comments, or anything else in, because we have Shiraz sitting here right now live to take your questions. I'd like also to say hi to C. Greenridge, who's watching right now, and he says, yo, guys, thanks.
Yeah. Thank you. Thank you for tuning in. Shiraz, just kind of as a I guess as a wrap-up question to the Q2 and earnings season and everything, with everybody that's kind of reported already, I know there's a lot of big names still to come. I guess, is there really even a earnings recession coming, or is this the way the Fed is kind of trying to combat that reaction with the investors? Because I keep hearing earnings recessions, earnings declines, but then from what you just said about the Fed and how they cut interest rates and the stocks will go up, is that a way of counterbalancing that, or is this just something that naturally happens through historical data and with the market?
It's the later one. It naturally happens through data. And the recession, just to remind listeners, it's 2 consecutive quarters of negative growth or declines. And that's what is on the horizon for earnings. So what happened in Q1, the March quarter, was essentially flat, a tad bit in the negative. The expectation for the June quarter, which is currently going on in the earnings season, for which is going on right now, is also negative. Very small negative, but negative nevertheless. And a similar negative growth is expected for the third quarter, for the September quarter as well. And it's these negative expected growth rates for these quarters that's giving rise to what you're referring to, this earnings recession narrative. It's not that earnings are going down in a major way for cyclical reasons, even though there are some concerns about growth in China, growth in Europe, in all of those places. But the outlook for the U.S. economy remains good. Earnings overall remain very strong. The only reason why we have these modest declines is because 2018 was so unusually strong.
Right.
You would recall that at the beginning of 2018 we got a major corporate tax cut, which really juiced up earnings.
Benefited a lot of companies.
We got record earnings in each quarter in 2018, and it's the comparison to that record period that we have this 1-2% declines. I'm not concerned about that at all. I think the market is able to look past that as well. The expectation is that in the fourth quarter of this year, growth resumes, and then we have a 10% growth in 2020 as well. So as long as the outlook for the U.S. and global economy remains stable, I think the earnings picture should remain stable as well.
So we don't need to run away from the stock market just yet.
Absolutely not. You should never run away from stock market. You should always stay invested. and keep your eyes firmly locked on the stocks and the companies and industries that you like.
Diversify, right?
Absolutely,
Okay.
absolutely.
All right. Well, this might be a good time. I thought we could kind of just, since we talked so much about earnings, that we could take a look at two huge companies that are earnings or that are reporting their earnings tomorrow.
Sure.
Which is Amazon and Google. I know a lot of people have their eyes on them. So I thought I'd just see if you have any kind of tidbits or things that we could be watching out for in their earnings call and then their report tomorrow.
Sure. So Amazon has been a star performer on the growth front as well as in the stock market. The stock is up more than 30% this year, handily outperforming the market, the tech sector, the retail sector. And the big story on the Amazon front is growth. So it's growth in its core retail business. It's growth in its cloud business, which is called the Amazon Web Services or AWS.
Yeah.
Amazon is also becoming a major advertising platform, and it's in this advertising platform business where some people think it is becoming a threat for Facebook and Google. So a lot will be depending on growth. The expectation for this quarter is that there is 18% revenue growth and continued strong growth on the Amazon Web Services, the cloud business. The momentum should be there. We have heard from Microsoft already. Microsoft had very strong cloud numbers. And this suggests to me that we should see very strong numbers on Amazon's cloud business as well.
Which is great. And it's a Zacks rank number 2.
It is
which
Zacks
is
rank number 2.
A great way to kind of get a good feel for everybody saying, hey, estimates are going up. Maybe it's a good time to buy, right?
Absolutely.
Okay.
There's no reason to think that the momentum in Amazon's business is slowing anytime soon. Many investors missed the opportunity in Amazon, looking at conventional valuation metrics and thinking that, the stock has gone up way too much and beyond their reach. In all of those who have done that, don't have anything to show for that. Google, on the other hand, has been struggling. The stock has lagged the tech sector, has lagged the broader market this year too. Growth has been decelerating in Google, but it's still a very big company with a ton of growth. The expectation is that growth for top line growth, revenue growth for Google would be about 17.5%.
Okay.
And earnings, EPS, is expected to be essentially flat. There have been some macro aggregate regulatory type of issues that have been weighing on Google.
Yeah, Europe's a real problem for them right now.
Europe's a bigger problem. There's a lot of talk about how this debate about privacy will shape up, what type of new regulations the governments here and elsewhere in the world will come up with. So those are some of the issues, but folks who have a much longer holding horizon and who can ride out the current turmoil for Google should take solace from the fact that the stock really hasn't taken part in the broader market gains and perhaps is not as expensive as some of the more faster growing and better performing stocks in the market. So yes, it's a sell rated now.
Yeah, it's at a 4 right now.
That's right. And it has
at $1,136 a share. I don't know if I can afford that one for my portfolio, Danny.
No, I don't think I could either. It's a little out of our price range, and I'd say PE is ridiculously high. I think
yes.
Amazon was at a 75, and Google was.
I'm on the wrong page right now. I'm looking at their pricing consensus chart.
Okay. But yeah, I mean, overall, it sounds like Amazon is a bit of a growth play right now, and they're doing pretty darn well with their cloud services.
That's right.
Google sounds like more of a long-term play.
Google is a long-term play. There are some questions about how the regulatory landscape will shape up. So the current headwinds for the company may last longer than many of us expected. But if one has a holding horizon that's beyond the next couple of years, Google is a great franchise. has a dominant position in the market. They're investing in a whole bunch of new technologies on the AI and machine learning in all of those things. And once they are successful in those moonshot projects, those could be great revenue opportunities for Google as well. Currently, they're not doing so good.
Yeah, their forward PE right now is at 25.
So a little bit cheaper than Amazon.
Oh, geez, you want to see something funny? Show them the Amazon. Show them my computer real quick, Danny.
Yep.
So you can see the price. I mean, geez, like almost $2,000 a share. But then you look at that chart.
And it looks beautiful. Even when they
straight up,
even when they missed on expectations.
1, 2, 3, and 4. But look at those. I mean, every consensus chart goes, oh, it's going lower. It goes up. Yeah, it's going lower. Oh, look, it went up.
Yeah. So like we said, it's a big growth play. Watch out for those tomorrow. They're going to be definitely ones investors are keeping their eyes on.
Sure.
Ones that are definitely going to probably have a little bit of impact on the market and the way the sentiment will go forward. Eric, I know we discussed kind of looking at our portfolios here. Did you have
it's time to go to the battleground?
Yeah, the battleground. Did you have a stock that you wanted to bring to the table today?
So Shiraz, if you take a look here and give me your opinion, my stock is TAK, which is a name I can't pronounce off the top of my head, and I wasn't prepared with my slide.
I would say it's Takeda. I'm not sure. It's a pharmaceutical company.
Right.
Oh, that's a Japanese pharmaceutical company, yeah.
Yep, Takeda Pharmaceutical Company. So I had looked at this thinking that I'm looking for diversity. You know, I added, what was that to my stock the other day? I added, oh man, I am just a mess. I can't even remember. I just went to your portfolio.
Don't click on mine. You don't want to show the gains of Square.
Yeah, Square went huge. Square was just blowing it out the water with their 20%. I had a Disney. That's right. I don't know why they took me so long to remember, which is down today. Wah, wah, wah.
Not so much though. It's kind of hanging out.
Yeah, it's not going far, but in long term there. So I know I needed something for healthcare. So I looked at Takeda as just an idea of a healthcare stock. I saw as a number one strong buy, value A, growth D, momentum B, VGM of B.
Sure.
And what was important to me is talking to Kevin, he had told us to make sure you look at where they are in terms of their, Zacks rank. So the top 35, 88 out of 254, and their Zacks sector rank, they're the top 13, 2 out of 16. So I thought this was a good choice. Shiraz,
I totally
shoot me down.
I would totally agree with that. A diversified portfolio not only requires high flyers like the Amazons and Googles and Facebooks of the world, but also stocks that can anchor your portfolio when the times are more turbulent. And companies like Takeda, if I'm assuming I'm pronouncing it correctly, will fall in that category. I'm looking at on Zacks.com that it has a market cap of close to $27 billion, has a beta of 0.7. What that means is that when the stock market overall moves up or moves down, the Takeda shares don't move as much. So it's more of a defensive stock, and that's what makes a portfolio diversified. If you have companies that have stable, recurring, low risk revenues, which is typically what drug companies are, so it rounds out a good diversification element to your portfolio. Pays a very good dividend too. I'm seeing on Zacks.com that its dividend is yielding 3.5%, which adds up to quite some amount in the end.
And that's 3.5% per year, correct, or is that per quarter?
So that's the yield. So the dividend yield is you take the annual dividend for the company and then you divide it by the current stock price.
Okay.
And it's that ratio which is called the current yield. I don't know what the growth rate for dividend has been, but most companies typically, particularly drug companies, would typically grow their dividend at least once a year.
Okay, so it has a bit of a safety net, you could call it, where you're going to have some type of income coming in every year.
Absolutely.
Okay.
And will anchor your portfolio too. So it wouldn't be flying high, but when the things are down, this will hold the portfolio in place.
Okay.
So would this be a yay or a nay in your?
Oh, a big yay.
Big yay. Winner, chicken
get a
dinner.
winner.
Yeah.
Okay.
And I'll tell you, I'm probably going to add that one today. So we'll quickly do that as we go on to the next topic.
Okay. Well, I brought in one stock, and it's not really it's one we've talked about before. The stock is Under Armour UAA. Like I said, I think it was two weeks ago or a week ago, I mentioned I was excited about it because retail is making a bit of a comeback against e-commerce. They're showing their stance. They're really fighting back against Amazon and Walmart. I know a lot of companies are starting to sell strictly through their actual websites. Nike's doing really good at that. Adidas, a lot of those companies. I saw Under Armour kind of making a bit of a comeback here as well, which is along with the trend in retail. But I saw their earnings is coming up on the 30th, and I mentioned that I was a little nervous to, I guess, make a purchase, and I was curious if it's something that an investor should wait to see how a company does, or if you're just really gung-ho and you're like, hey, this company's doing good, I really believe in it. Is it something you should just buy right off the back, or is it something you should kind of wait and see how those earnings come out on the 30th, it looks like, on July?
Yes. So I would personally, since I'm a little bit more cautious, it's very hard for me to get gung-ho on anything
Right.
entirely. It's the quarterly report season is this window that gives you the latest information about trends in business.
Okay.
So as a long-term investor, for example, Under Armour is an amazing franchise. The stock really has been struggling the last couple of years.
It has, yeah.
Nike has been doing very well, but it's a great company, has great products, has great future. If you are convinced that this apparel, sporty type of name belongs in your portfolio, then you get into it irrespective of the earnings season. But a good balanced view will be that you wait for the earnings report, you get a sense of what management is talking about, trends in business, that gives you fresh, new, updated information about trends and should help you making the decision, a more well-informed decision about the stock in general. So to answer your question, I would suggest waiting for the report and getting a more updated view of what's happening, because the information in the public domain, if we are close to the earnings season, the earnings report for a company, for example, is 3 months stale.
Right.
So we do get information.
That's very true. Yeah, you forget about that.
We do get information after the earnings release as well, but this is the one opportunity when the management team comes out, explains what the company did in the quarter, and also explains what trends in the business are, what they are seeing happening on the ground.
And they tend to know what they're talking about, right?
You would hope so.
Getting paid quite a bit. Let's hope so.
Yeah.
All right. Well, it kind of backs up the way I felt. I'm feeling like I'm a bit more of a cautious player, but I'm going to definitely watch this. I think everybody needs to tune in next week after this earnings. It looks like on the 30th, so next Wednesday.
Make sure you add it to the watch list.
Well, yeah,
we can
it's
check
on
back
the
on it.
It's on the watch list. We're going to check back on Wednesday to see how it did. Probably take a dive into it to see what's going on.
Today's
maybe add
Wednesday,
it on.
buddy. You mean Monday?
No, next Wednesday.
Oh.
Next Wednesday. Yep. It reports on the 30th, which looks like it's on a Tuesday. So we'll watch out for that and kind of go from there, and maybe we'll add it on that Wednesday. But Eric, you said you're going to add some stock to the portfolio?
I already did. I already added the 2 shares there, I think I put in.
All right, well, let's take a look.
Can
you show us here? Because this will be a perfect time to kind of show how your stock's doing that you...
it's not doing well.
It's not doing very well?
Yeah, it's not doing terribly, but it's 0.2% down, but I don't like seeing red, so it kind of bugs me. But
I mean, Shiraz, when you buy a stock, is it guaranteed you're going to go in the green right off the back? Or is it something where you kind of have to have a little bit of patience?
Yeah, if you've done your due diligence in selecting the stocks that go into your portfolio, you shouldn't worry too much what it is doing on a day-to-day basis. Stocks on a day-to-day basis could move up and down for reasons beyond
The actual
specific to the company. That's right. So I wouldn't worry too much, Eric, if your stocks are down a little bit. It's the long run that counts. If these stocks are down 3, 6, 9 months later too, then you need to
Then
make
I have to
changes.
worry about
That's
it.
right.
Well, yeah. If Takeda goes down, I'm going to come back and get back on you. I'm going to ask you back to the show and ask why my
Absolutely.
stock went down.
So one thing you should and listeners should keep in mind too, that when the overall sentiment in the market is very positive, then typically investors, market participants don't like to hang out with stocks like Takeda or Pfizer or Johnson & Johnson. These are the boring defensive stocks. These become valuable when the chips are down.
Right.
So if everything is hunky-dory and sunny and nice, then folks are most likely not paying attention to the likes of Takeda.
They're looking at stocks like Square.
Yeah,
the ones
that's
that-
right.
The ones that move.
That's right.
Yeah. Well, I figured I wanted to put a couple defensive plays in there for the long term
Yeah.
before I started getting squirrely with the
Sure.
fast-moving momentum
It makes
stocks.
sense. It makes sense.
I'm taking the long bet, hopefully.
All right. Well, with mine, it was Square. It's been doing pretty bland. Like we said, it hasn't moved much. We're up almost 0.5% off of the few days. So we it looks like we bought in an okay spot. We'll see how it goes. I think earnings are coming up pretty soon for this company as well. So not much to report on that one.
I mean, you're up 0.1%, so you're beating me already.
Hey, we'll take what we can get. Shiraz, do you have any kind of thoughts on Square? Is it something that you kind of thought was a decent stock to kind of get into?
If you could show my screen with which is showing a subset of the stocks in the focus list portfolio.
Ooh, look at
that I manage.
Little inside information
And
here.
That's right. So Square is the top performer in the focus list portfolio, but I got into that stock much earlier. It's up
Yes.
357%.
Jeez.
Wow.
And it's an amazing company. They have an amazing product. It's an underserved niche in the market where they are becoming a dominant player. And the expectation is that the growth trajectory that this company has, we are just at the beginning stages of that. In fact, I get emails from subscribers all the time. When do you will get out of Square?
Never.
And we have had some amazing, as folks can see here, there's Square with 357% gain. There's Lululemon,
Another great
156. Microsoft, 152. Sam Adams,
Gotta love their products.
129. Yeah, we all love that product. So it's Square is a great company.
So to
I'm
get on the
excited.
focus list, they could just get that from Zacks.com, right?
Yes, so it's part of the Zacks Premium.
Oh, it's a premium service.
It's a premium service.
Okay.
Yeah.
Okay. Wanted to make sure it wasn't one of our mailing lists.
Well, you
Yeah.
can get a free trial on it, and make sure you go to Zacks.com to sign up for one.
Could you tell us, before we leave, a little bit about the service that you run, which is Zacks Top 10?
Yes. So the Zacks Top 10 is a calendar year portfolio of 10 stocks. And the promise there is that we buy these stocks at the beginning of the year, and the goal is to outperform the market before the end of the year. And we have been doing pretty good the last many years. It's 10 stocks. We try to have some element of diversification in those 10 stocks, though it's not easy because you have only 10 slots in there. But it's a year-long portfolio. We typically don't make changes during the year, but every now and then we do make 1 or 2 changes mid-year if the fundamental outlook for any of the stocks in that portfolio changes. It is also a subscription product. It gets marketed at the beginning of the year, and then we run through with it through the end of the year.
And it's part of Zacks Ultimate as well, correct?
That's correct. Yeah.
All right.
Yeah.
Well then, folks, that is the end of our show for today. I'd like to thank those who joined us, and I hope that you like, subscribe, and add any comments below. Also, thank you, Shiraz, for showing up. As Danny's going to put up here, you can see that Shiraz is also, like we had mentioned, the editor of the Zacks Top 10 service, also available through Zacks Ultimate, and to check that out when you have some time.
Yeah.
So thank you, and we'll see you guys all on Monday.
Yep. Just one more. One more time. Everybody go to YouTube, go to Facebook, go to anything, hit those comments. Make sure you're getting involved with the chat, with the show. Hit subscribe, like, and like Eric said, we'll see you next time on the show on Monday.